What's going on, guys? My name is D Anthony and I want to give you guys some levels on Sofi. Now, even though Sofi was down, half a percentage point today, a little bit choppy, closed red, Sofi looks really good for a breakout. Now, if you guys have been following the NASDAQ 100 and the overall markets, some of these stocks in big tech are on an absolute just bull tear. Now, if you play small caps, maybe you play financials or retail, anything outside of technology, maybe you haven't really, come around to it yet, that, a good portion of technology is just in an absolute raging bull market. Now, SoFi is going to be attached to the financial space a little bit, right? Just due to the fact that, they're going to kind of go hand in hand. And we obviously know we've taken 3, 4, 5 tumbles on some regional banks, although SoFi's on a regional bank. But again, I'm getting off the point. What I want to look at here is the chart. Let's look at technicals, right? I'm not a fundamental trader. I'm not someone who's going to look at how much free cash flow does SoFi have and what did the earnings report say and what is the CEO's plans and what's in the news. I'm not going to do none of that. Because in order for a stock to move, it's got to break through technical levels of supply and demand. Now, again, those catalysts will move a stock, but you don't need to kind of be pulling your hair out and kind of being, draining your mental equity and your mental capacity down to zero because you're trying to figure out what the stock is going to do based on all the headlines, right? Let's just play the technicals. Let's just, kind of trust technical analysis. And let's look at the chart here. We did have a bottoming out period here on this low wick down to $5.10 on March the 13th. Ever since then, we've been holding this bottom floor here and we've been holding the bottom of this channel, which is the linear regression channel 50. If you guys want to put it on your charts, that's these 3 blue lines here, and here. We held this line here. We had a little bit of a bounce here, got rejected at the 20-day moving average and the 50 EMA here. Now you may be thinking to yourself, why so many lines on your chart? Each one of these lines, okay, is going to signify where potentially I can take a trade, where potentially do I have support, and where potentially is the next area that this stock is going to stop. Because if I'm in a trade long or short, I want to make sure that I take my profits before it gets there, right? The last thing I want to do is just think that, I'm going to continue to hold this stock forever and it's going to go up and up and up, or I'm going to short this stock forever and it's going to go down and down and down. We've got to be realistic and we've got to understand where potentially these stocks can go. Now, if we look at what we've been doing here since we held this 10-day moving average here back on the 22nd of March, I want everyone to pull up their daily charts right now with me. I'm going to give you a couple of minutes here. I'm going to give you a few seconds to kind of pull up the daily chart. We're going to go over this together, right? So go ahead, log into your platform. I'm going to sit here and I'm going to wait patiently. You guys should be logging in if you weren't already. Pull up SoFi, pull up the daily time frame. I want you guys to look at something here. Okay, if we look at where we stopped, where we closed, this nasty hammer candle on the 22nd of March, we stopped right here at the 10-day moving average. Now below that, we did have a little bit of support here at the 5 SMA, which is your 5-day moving average. Now, the 5-day moving average comes into play when something is power trending. If you don't know what power trending is, join Evolution Traders. I'll teach you guys all about it. We held the power trend here. We consolidated for 1, 2, 3, 4, 5, 6 days now. We have held, okay, the 10-day moving average. We have yet to close below it. What I'm looking at here is a lot of consolidation. The longer a stock goes sideways in a very small range, the better, right? Now, does this mean that we're going to break out to the long side? No, we could break down to the downside, but I like this going up. And the reason why I like this going up is because we haven't made a new low in just about 2 or 3 weeks. Not to say that we don't make a new low, but we haven't made a new low before that, okay? If we go back in time here, the last time that we traded below $5.10 was all the way down here, going back to around November, December, when we got as low as $4.24. Again, we held this for a very long time, almost 2 months in a row here. We held $4.24. Our highs were around $5. We held this for 2 months and then we absolutely exploded all the way to $8. Now that we've pulled back and look at where we're kind of holding, guys. We're kind of holding this last area here where we consolidated before we gapped up on earnings, right? So This is our new spot of resistance. This whole area here, the last area where we kind of gapped up, the last area that acted as resistance on earnings, we're back here to this spot. If we can just break out, if you look at this whole channel here going all the way back to January, look at this whole channel here. If we start to take out this 50 EMA, if you want to put it on your chart so you can see what I'm talking about, look at where we stopped yesterday. Look at where we got rejected on the 22nd. Look at where we gapped below on the 10th of March. Look at this whole area here. It's extremely tight. If we start to take this out of 593, we got $6.29 incoming, then $6.52, and then 667. Those are the areas that you want to play. Anything over $6.70 is going to have room to absolutely fly. Now you may be thinking, what if we break down? Well, if we break down and we close below 550, all bets are off. We're going to at least test 520. Okay, which changes nothing because it just takes us down to the bottom of the range and it's like nothing ever happened, right? So don't worry about the short position. I really personally wouldn't get, too scared about SoFi to the downside until we close below $4.94. But until that happens, let's not focus on that. Let's focus on the consolidation that we have here above some of these supply zones sitting on these demands. Now, if we look at the weekly time frame here, look at the weekly time frame from last week. Last week's candle was our first close back over the 20 SMA, and now you can see we've been rejected at the weekly 50 SMA. If we can just start to take out this 594, again, that $6.25 mark is in the books, and then we have that 688, and anything over $7.30 is the big one that can take us back up to these recent highs here of around $8.35. I think we could be setting up here for a little bit of a breakout off of this 20 SMA. Again, like I said, let's not get worried about the short position until we close below $5. If we close below $5, then we've got a lot of room down and we've got bigger problems, right? Again, on SoFi, let's keep a look at this tight action here. Again, this is trading sideways at the bottom of the range here. So some traders are going to think about it, well, all we're doing is setting up a little bit of a bear flag to kind of break down and go lower. Well, if you believe that, then short the stock below $5.50. Short the stock below $5.50, your first profit taken is going to be around 5.10, and then below that you're going to try to target like $4, right? Go ahead and do that if you would like. That's how you would play it based on technical analysis. I'm not saying that we can't do that, but it just looks better for the market to kind of go on a run for the next 1 to 2 months. And the only reason I say that is because we have not made a new low going all the way back to last year. So essentially for the past 3-4 months, we've been holding the bottom of the range. We're holding. We're not showing any more weakness. We're just consolidating. Now, if we were constantly making a new low, and then 2 or 3 weeks later we're putting in a new low and a new low, then I would say, yeah, maybe we're coming back down to $3. Maybe we're coming down to $4. Maybe this stock is going to zero, right? I don't know. Like there's so much nonsense that people throw out there on social media. Anytime stock goes down for more than a week, or a month, people think that it's time to sell everything's going to zero, right? Again, that can happen, as we've seen with some stocks as of late, these bank stocks, right? But this is holding the low, and it has not made a new low. So that is telling you it's bullish. 3-4 months of consolidation at the bottom of the range. We're testing. It's only going to be a matter of time. Now, if you do want to kind of load up here, your stop loss would be below $5. $5 stop loss, that's your max pain. So you're risking 72 cents on the trade. Essentially, you're targeting $7 at first, and then you would be targeting $8 after that. So I would risk 75 cents to make $3 all day long. That's a fantastic risk to reward ratio. Risk 75 cents to make $3. Okay, if you don't think that's a good trade, I don't know what to think. If you're a longer term investor, then you're targeting something a little bit higher, right? So if you're a longer term investor, what you would realistically like to see, and let me blow this chart up or condense this chart a little bit more, what you would realistically like to see for long-term investors is to close over $10, $11. Over $10, $11 breaks this whole bear trend that we've been in. It has potential to get back into the $20 to $25 range. Again, $10.67 is the price target that you would be targeting to. As long as we don't close below 5 or we don't lose 424, you got to just hold. Again, I hope you guys like this update. If you guys want to learn how to trade stocks and options using technical analysis, make sure to check all of the links down in the description box below, and I'll catch you guys all in the next one.